Hi, everybody. Welcome to the second segment, episode 248 of Sold with Updike Pugh. I'm Jeff Updike.
I'm Weston Pugh, and today we thought we'd talk about rent or buy.
Rent or buy. I can guarantee you that if you're going to be in a home over five years or more, it is always to your advantage to buy a piece of property.
I agree with that. And I don't think it's just because we're in the industry, because I remember when I bought my first house in San Antonio, I bought it new construction. I bought it when it was still Clichy Roads back there. And I have to say that because I bought that house and rates were at 8, because I bought that house at that time, when it was time for me to move to Dallas, it was that nest egg that I had planted 14 years before that allowed me to come to Dallas to set up my life here. And had it not been that, you and I wouldn't be here, because I moved here in 2008 when the market fell out from under me, and I went a year before I had my first paycheck from real estate. And if it hadn't been for that equity, I would not be able to make that transition.
And there's kind of two parts to building equity when it comes to a house. I mean, there's the one part that you have in most instances, a fixed rate loan that is 15 years, 20 years, 30 years long, and the payments are amortized over that period. And as you make more and more payments, more and more of that payment goes toward your equity. So the farther farther you get into the mortgage, the more and more you're going to be building equity.
And the other way you make equity in your loan is by the appreciation of your surrounding areas. As homes begin to sell more, and if you're not familiar with DFW, especially inside 635 in Dallas, we continually see very strong appreciation values. We've slowed down so that we're not fanatic like we were 18 months ago, which we are all thankful for, but there is still a nice appreciation. So I guess one way to look at it is if you don't buy, you're not getting any equity at all.
That is true. A lot of people will say, "Oh, well, I'm going to rent because, I don't want to pay taxes." And I can guarantee you, the owner of that building is accounting for the taxes in your rent.
Absolutely.
It's interesting. And one of the other ways that you can use your property is, let's say you buy the house 5 years down the road, you're ready to buy something different. You don't have to sell that home in order to necessarily to buy the new one. There are low down payment programs available on second home purchases, on your new primary home. Even if you're converting your other one to rental, you still have that opportunity to rent that house out, continue to gather the appreciation, and let somebody else pay you for that over whatever period of time you have left on it.
And say that you have a house and you want to actually make improvements on it, you have access because you have collateral to actually tap into that. And whether it's a HELOC or a cash out, there are ways for you to get that money and have that money work for you that a renter would not have access to, even come close to it.
I agree. And there are tax advantages still. I know a lot of these changed when the tax laws changed 4 years ago, but you can still write off property taxes. You're still allowed to write off interest on your primary home with some limitations, interest on your secondary home with some limitations. And then if you did convert that to a rental property, all of the taxes you're paying on that transaction then become tax deductible, just like all of the interest that you're paying on whatever investment property you have.
Yep. And so I'm going to diverge for a second. This isn't part of it, but like if we think about what happened 18 months ago, when buyers were making offers, what was the scenario like? If you weren't in Dallas, what did most people have to experience?
As a buyer, you were usually competing with 10 or 15 other offers. You traditionally had to make an offer way over list price, in some instances overpaying for the property because you really wanted that house. That house fit, your lifestyle. And then a lot of times you had people that were waiving their appraisals. They were waiving their option fee periods. They were waiving inspections. That's a tough market to work in. I don't care which position you're in. That's a tough market.
It is. You'll get the house and you get all of those benefits we just talked about, but it's still a little nerve-wracking. And one of the things that we kind of want to point out is that is not the scenario right now. Houses still can move in the weekend, but they're not moving in 30 minutes, which is really great. And by move, I mean they're not going under contract. And so you're at a situation now where you can make a full decision. If there's other decision makers that need to weigh in, if it's the first house, this is a great time for you to be stepping into the market. And I think that you have such a great saying when you talk about marry the house and
Date the rate.
And I thought that for a while I was like, what is he talking about?
I wish I was the first one that said that.
I know, but it's a good one, because if you think about it, if say that today rates are at 7 and 8 and you go under contract, well then turn around and 2 years later they're at 5 1/4, you can refinance.
Absolutely.
It's so early in the loan calculation process that it doesn't make that much of a difference to you, but yet you save so much.
And many lenders are coming up with being very, very creative, because that market's become so competitive. But many lenders are saying, if you buy today and you refinance anywhere in the next 24 months, we'll waive A, B, and C of the processing on the refinance. Yep. There's some cost that'll be associated with it, but they're waiving a lot of that because they do know that they don't know. They think that's what's going to happen, like the rest of us.
Right.
One of the other ways that are real interesting right now is you can do this 2-1 buy down.
I was just going to say,
okay. Well,
let's get it. No, I think it's perfect, because I don't think that everybody knows that that's actually on the horizon right now and could make a huge difference for you.
It can. ARM loans right now have kind of become a bit attractive again. I think things are settling out in the mortgage market a bit, where it's not quite as chaotic as it was for a while. And one of the things that I think is really good also is you really control your long-term costs when you're buying a home, because your payment, being your principal and interest, is going to stay the same for the term of your loan.
Right.
Your property taxes might go up, your cost of insurance might go up, but those are also factors you are going to be paying if you're renting a property somewhere, because again, that owner is taking all of that into consideration when he is determining rent rates on those homes, apartments, whatever.
The one thing that is not calculated in a mortgage that is calculated when your rental, when it comes for renewal, is the needs and demand. And when that really gets outstripped, that's when we see $300 and $400 a month price increases in rent. So these are things that you can't control, and suddenly you're having to think about moving further out. Maybe all of a sudden you're looking at Roanoke, or you decided that Salina now is where you have to go, and now you've tacked on a 45-minute commute. So these are things that we're not trying to we're just trying to make it well aware of what's happening, because there was a newscast that's very, very popular in the morning that said that this was the absolute worst time to buy, and it kind of triggered this discussion today to say, wait a second, let's unsensationalize this. We don't have shareholders to appease. We don't have advertisers to make happy. Let's just nuts and bolts and talk about our neighborhoods and what we're seeing here locally.
So I hope you found this helpful. If there's any other detail you'd like around it, or if there's any other topics you'd like for us to share and give you some information on, just put them in the comments below. We would be happy to have that happen.
And just remember, we want to be realtors for life.
When you're ready to talk real estate, you can reach us online, by phone, or by text at 214-377-2223.
And remember, we want to be realtors for life.